Hello and welcome. You're watching Buy Now, Sell Now. I'm with you, Kavita Thaplia. With me is my colleague Ankita Saxena. And next 1 hour is going to be all about your stock-specific question. That's right. New week and the first trading day, and we can see the market holding really steady with Nifty almost close to 24,200 right now, up almost three quarters. The broader markets, in fact, if we look at Nifty Small Cap 100 and Mid Cap 100, both up more than 1% in terms of sectors. Broad base except for IT, where we can see almost 0.5% cut right now on the index. But look at auto, almost up 1%. We can look at pharma, FMCG, metal, reality. Media is down flat, but on the negative bias slightly. Defense almost three-quarter up. We are looking at risk-on behavior in terms of sentiments from the investors. Continued sectoral rotation beyond the large cap defenses is also what we are looking in the markets today. Definitely a momentum is also being driven due to specific results that we are seeing. But let's also look at some stock specific action that we can see right now. Let's pull up Epigral, which is up more than 7%. Earlier in the trade, we saw 736 crores on the revenue front, and it's a record number. It's almost 2.5% up. That's a strong movement coming in. We saw 736 crores revenue. It's a record up 17% year-on-year basis. EBITDA almost 63.8%. So fantastic set of numbers that we can look at. Along with that, MNB Engineering also reacting because of pre-engineered building order that the company has received, and along with that, a lot of stock-specific action basis the quarter results. But it's time to, in fact, get in touch with the management, and let's begin dissecting the Q4 results. Joining us now is IndiaMART, Mr. Dinesh Agarwal, founder CEO IndiaMART, has joined in for more conversation on this. Hi, morning and welcome to the show. Quickly, let's look at the scorecard as far as the numbers are concerned. Revenue, there has been a miss. PAT has been a miss. EBITDA, in fact, margin has been in line. What would you like to, talk to us in terms of first comments on the numbers?
See, I don't know where you're taking the revenue has been a miss, but revenue has been in line with the guidance, and margin has also been in line with the guidance. Only the other income part, which has been mark to market, has been missed because the market has gone through the volatility of interest rate changes as well as stock market changes.
Agarwal, this is Ankita also joining in. For quarter four, there has been a miss on the PAT front, but on a year-on-year basis, that has taken a sharp hit. In fact, it has fallen 70%. What has led to the pressure on PAT and the margins, and what would be a margin outlook or guidance going ahead?
As I said, these are the other income effect. These are not the EBITDA effect. The EBITDA remains intact. The revenue remains intact. The other income has been fluctuating based upon the mark-to-market, gains or losses that happen every quarter, because we have about 3,000 plus crores of treasury, and that treasury is invested into the debt and equity and other mixes. And based upon the market fluctuations, those are mark-to-market every quarter. This particular quarter, there has been increase in the interest rate as well as decrease in the stock market equity indexes, and that's why other income you are seeing minus 33 crore, which has resulted into this kind of a thing. But similarly, if you see, these are quarterly fluctuation. On a year-on-year basis, even the other income has grown considerably.
Right. Let's look at the subscriber base, Mr. Agarwal. Subscriber additions remain weak and even declining this quarter. Now, just want to understand from you the reason behind this, and also what concrete steps are you taking to revive net additions?
Yes. So on the paying subscriber addition, you are right. We have been weaker. Last 2 quarters, we have had negative subscriber growth. We had taken a price hike sometime in the beginning of last quarter, and we were expecting 2 quarters to stabilize this. I think it is taking a lot more in terms of the gross addition as compared to what we envisaged in the beginning of the price hike because of the geopolitical tensions that emerged in the quarter 4. I believe the pain is going to be continuing for 1 more quarter, and then we'll look at from there. On the front of improving the churn side, I think we continue to work on improving our product quality in terms of ROI to the subscriber base, as well as better repeat behaviors from the buyer side. So buyer side, if you really look at, we are running into the nearly all-time high 59, 58% of the repeat buyer on the 90 days. We continue to work towards the product so that we can improve the repeat buyer base even further.
Mr. Agarwal, also with silver tier churn still elevated at around 4 to 7%, how soon can we expect the stabilization in this segment?
As I said, we are working towards the product market fit, and it will, in the due course of time, it should stabilize.
Unique inquiries per supplier has also declined by almost 1% year-on-year basis. What is leading to this?
Yeah, we are, if you remember, we are initially we worked towards the supplier side of the verification. All the supplier, whether it is email, phone number, then GST verification, those kind of verification started. Now we have taken steps towards increasing the trust in the marketplace even further. Now we are starting to do the buyer side of verification also. And buyer side of verification, there might be certain small drop in terms of conversion on the platform, and that is leading to this daily unique inquiries a little bit softer, and we expect to remain that softer for a few quarters.
Right. Mr. Agarwal, you have made investments in the credit facilitation and logistics. When do you expect these verticals to meaningfully contribute to the revenue?
See, we invested in around 2022-23 in multiple such initiatives. One such initiative was accounting and bookkeeping, where we invested in Vyapar and Busy and acquired Livekeeping. If you see the consolidated growth, and consolidated growth now looks better than the standalone IndiaMART growth. Busy has performed exceptionally well this particular financial year. They have grown their collections to almost 170 crore rupees, and their revenue also to 119 crore rupees. They have generated cash from operations this particular year about 45 crore rupees. So accounting segment has already started to contribute well. In terms of the other segments like logistics, we are a minority shareholder in those segments, and we continue to get mark-to-market upside on those segments.
All right. One last question before we let you go. Given MSME pressure and geopolitical headwinds out here, what is your outlook on demand recovery over the next 2 to 3 quarters?
Yeah, I think because of these uncertainties, MSMEs are a little bit worried. And, as soon as the prices stabilize on the oil front as well as on the interest rate front, I think things should improve. We remain optimistic because we are slightly secluded from the at least the war area, but we are exposed because of the oil prices and other export-import commodity prices.
All right, Mr. Agarwal, on that note, thank you so much for taking the time out and joining us and weighing in on the numbers. It was a pleasure to have you on the show. We'll let you go on that note and slip into a very short break. And after the break, we're coming back and getting all your questions answered. The number is going to flash on your screen, so start writing into us with your stock-specific query, the buying price, the holding period, and your question, and we'll get them answered by a fundamental guest and a technical expert. Both of them after the break. So stay tuned, and we'll be right back after this short break.